Hi, Monday, August 1st, 2016. Monaco 64 here, home of alternative economics and contrarian views. I like to talk about crude oil today. I usually don't cover crude oil too much, but it's been moving down quite a bit today. U.S. crude or West Texas, the future is down 143 cents or 3.44%. It's trading at $40.32. The low is $40.14. So since the middle of June, when we reached a high of 52, we're down about 23%. But first of all, I'm going to talk about the technical picture in oil, long term, and then the short term perspective, technical perspective. And I also talk about the fundamentals and what I think, this move down in crude oil since June means in terms of economic activity around the world. So, longer term, the $40 level is very important. And as you can see by this chart, back in, I think it was, July 2004, oil broke through 40. And at that time, that was like the all-time high. It was a really, really important level. And we broke through that level, July 2004. And we never came back below that level, as you can see, until the end of 2008 in December, and also January and February of 2009. And since then, since that time, it went up again, up to almost 120, and then it dropped back. And earlier, in 2015, it dropped back below 40, went back up, and then in December, January, and February of this December of last year, January, February of this year, as you can see, we dropped below 40 again, but then rebounded and went back up all the way to 52. So historically, this 40 level is really important, as you can see by the longer term chart. So now I'm going to move more into the shorter term, looking at oil in the last year. You can see now by clearly that looks like we formed a double top. 50, around 51 was the high October last year, around 51, and we had a high in June this year of 52. That is not an exact double top, but pretty much, I would say. And the midpoint would be around the lows we saw in January and February this year, around the 28 level in oil. I'm not saying the objective, is going to be like, below 10, because that's what, this double top is saying. But it's just an important level, that 28. So it looks like it's going there. It's not going to go in a straight line nor tomorrow, but it looks like the trend has definitely changed now, and we could definitely go test that low from the beginning of the year. And the first key level, of course, is this 40 level. So we need to keep an eye on 40. If it breaks that level, I would expect to see a lot of stops being triggered by speculators, funds, and whatever. So let's see. Right now, crude is $40.27. So that's down about 150 cents right now. And fundamentally, in the beginning of the year, if you remember, a lot of times when crude had a bad day, the stock market had a bad day. If crude rebounded, the stock market went back up. There was this strong relationship, are the banks going to be hurt? All the derivatives, all the money related to oil that they did, all the deals. And now, we're down 23%. I think the market needs to, the market could be pointing to, a symptom that the global economy is in not very good shape. Just look at the GDP the other day. So in my opinion, fundamentally, this is telling us that things are not as rosy as we've been told. Even in the UK, even though they're using Brexit as an excuse, we had a manufacturing number today. It was really bad. So yeah, I think we are entering in a recession globally. Even the US, the UK, we're probably already in one. So yeah, that's what I think it means. The weakness in oil, and it'll make it very hard for the Fed to hike rates anytime soon, in my opinion. So yeah, if you enjoyed this video about the oil market, and you enjoy my videos generally, please like, share, and subscribe. And if you'd like to donate, there's a couple links below, one to patreon.com and one is my Bitcoin address. If you'd like to donate Bitcoin, we accept that as well. And yeah, take care, and I'll talk to you later. Bye.